Every nation on earth is in debt. The United States owes more than $38 trillion, a mountain so high it could buy every house in America twice. The European Union carries 14 trillion, Japan nearly 9, even oil kingdoms drowning in crude and manufacturing giants powered by exports all share the same condition. They owe. But if everyone owes, who is owed? If every ledger bleeds red ink, who stands at the top collecting interest from the world itself? Debt was once a mark of weakness, a sign a ruler had lost control of his gold. Yet over centuries the meaning changed. Today, debt is strength. The power to borrow is the power to rule, to wage wars, to build cities, to promise comfort no tax can fund. Credit replaced conquest. Interest replaced tribute. Every highway, every skyscraper, every social program is built on invisible IOUs. The modern world does not run on gold or grain. It runs on belief. Belief that tomorrow will be richer than today, that growth can outrun gravity. That belief now supports more than $300 trillion of global debt, 3 times the value of everything humanity produces in a year. It's too vast to imagine, yet it shapes the price of your bread, your rent, your retirement. It is the unseen heartbeat of civilization, steady, hypnotic, and fragile. But faith is not free. The same force that built prosperity also binds it. Every promise must one day mature. Every empire eventually meets the bill it has postponed. To understand how the world became addicted to borrowing, we have to go back before Wall Street, before the IMF, to a war-torn England in 1694, where a desperate king traded debt for survival and invented the modern world. The year is 1694. London smells of smoke, mud, and gunpowder. England is losing a brutal war against France. The treasury is empty, gold reserves gone, and the royal mint silent. Merchants whisper of collapse. Soldiers threaten mutiny. For the first time in centuries, the island empire feels poor. But crisis is fertile soil for invention. A circle of wealthy traders proposes a new alchemy, money without metal. They offer the king a loan backed not by gold, but by his people's future taxes. In exchange, they demand something no monarch had ever granted before, a permanent income stream, interest forever. The king agrees. Desperation makes philosophers of us all. From that signature emerges the Bank of England, a machine that turns trust into currency. It issues government bonds, little paper promises that can be traded like treasure. For the first time in history, a nation can spend tomorrow's wealth today and call the debt itself an asset. Gold no longer defines money, and confidence does. The value of a coin is no longer the metal it contains, but the promise behind it. War is no longer limited by treasure chests, but by belief. And belief has no weight. It can fill the world. The idea spreads like fire. France copies it to fund Louis XIV's wars. The Dutch Republic perfects it into a science of credit. And across the Atlantic, a century later, a rebellious America uses it to finance its independence. What began as a wartime experiment becomes the architecture of the modern world. Bonds become the bloodstream of civilization. Every factory, every port, every army funded by paper and faith. Empires rise not on conquest but on credit lines, and credit requires one thing above all, belief that the future will arrive. From this moment forward, debt ceases to be a scar and becomes a crown. To owe is to exist. To borrow is to belong to the system. The deal that saved England also rewrote morality itself, teaching every future empire the same seductive truth. If the future can be sold today, why ever stop selling it? A century after England's experiment, the world has learned its secret. Power no longer needs to conquer land. It can conquer balance sheets. Debt becomes the bloodstream of empires, pulsing quietly through every port, parliament, and palace. The creditor replaces the conqueror. The contract replaces the canon. By the 19th century, France, the Netherlands, and Britain all live by the same creed, that tomorrow can always pay for today. Governments issue bonds. Banks package them. Investors trade them as if they were gold. The world discovers a new kind of empire, one measured not in territory, but in trust. Then the industrial age multiplies everything. Railroads, colonies, and wars are financed not by treasure, but by leverage. National debts that once counted in millions now climb into billions. Money and obligation blur until they become indistinguishable. The map of trade routes and the map of credit lines become the same. By the 20th century, the machine is global. The United States inherits Britain's crown, not through conquest but through liquidity. The dollar replaces the pound. The bond replaces the banner, and the promise that every debt will one day be repaid becomes humanity's new religion. After World War II, that faith becomes institutionalized. The International Monetary Fund, the World Bank, the new global order, all born from the same logic: lend to grow, borrow to survive, and trust the system to sustain itself. The world no longer trades in gold or grain, it trades in promises. By the dawn of the 21st century, debt is no longer an instrument of finance, it is the foundation of civilization. Every paycheck, pension, mortgage, and investment rests on a single assumption: that the chain of trust will never break. But the higher the structure climbs, the thinner the air becomes. When every nation owes and every citizen depends on that debt, the question changes from who owes to who owns. And the answer, as we'll soon see, is far stranger than anyone expected. Every empire believes its debts are different, manageable, justified, eternal. But as the numbers swell, something strange happens. The map of debt starts folding in on itself. Every country owes, every country lends. The creditor and debtor begin to look the same. The United States owes over $38 trillion. Half of it is held by its own citizens, banks, pension funds, insurance companies, and the Federal Reserve. Another third belongs to foreign nations: Japan, China, the United Kingdom, and a constellation of smaller investors. Yet when you trace the chain far enough, you find the loop closing. America owes dollars to the world, and the world holds those dollars because it owes them to America. Japan buys U.S. bonds. The U.S. funds the IMF. The IMF lends to Europe. Europe lends to developing nations. Those nations park their reserves back into U.S. treasuries. A perfect circle, a financial ecosystem that feeds on its own reflection. On paper, it looks stable, a web of trust connecting nations. In reality, it's a hall of mirrors. Each country believes it's holding an asset, when in truth it's holding a promise. And every promise depends on every other promise remaining believable. It's a planetary game of musical chairs, except the music is confidence. As long as it plays, everyone stays seated. But if it stops, even for a moment, there aren't enough chairs left for the world to sit on. Central banks manage the rhythm. They buy bonds, create money, and call it liquidity. Each transaction is a heartbeat, one balance sheet swelling as another contracts. No debt is ever paid, only rolled forward, renewed, renamed. It's not a conspiracy, it's policy. Governments aren't expected to pay down their debts, they're expected to refinance them forever. Debt isn't a burden anymore. It's the bloodstream that keeps the system alive. The danger isn't default, it's disbelief. Because when faith fades, the math stops working. The illusion of safety isn't that nations can't go broke, it's that they already have. They just haven't stopped pretending otherwise. Behind every national debt stands a priesthood, unelected, unseen, but obeyed by kings and congresses alike. They are not soldiers or politicians. They are the central bankers, the fund managers, and the rating agencies, the interpreters of faith in an age of finance. A government can pass laws, raise armies, or promise reforms, but it cannot borrow a single dollar unless these institutions permit it. Markets decide which nations deserve low interest and which must beg at double digits. In this quiet hierarchy, democracy governs people, but markets govern nations. When confidence rises, yields fall. Borrowing becomes cheap and prosperity blooms. But when confidence cracks, interest spikes like fever. Currencies collapse, governments resign. The high priests call this market discipline. History calls it surrender. Central banks sit at the altar of this system. When the world trembles, they do not pray. They print. The Federal Reserve, the European Central Bank, the Bank of Japan, each one manufactures trust with keystrokes. Money is no longer earned, it is issued. And every new dollar is born from someone else's debt. This is the hidden symmetry of the modern age. Every asset on one balance sheet is a liability on another. Every dollar you hold is an IOU from a stranger. The world's wealth is nothing more than perfectly balanced promises, until one side stops believing. It's not malice that sustains this structure, it's faith. Faith that the institutions are impartial. Faith that the math is honest. Faith that the same hands which caused the last crisis will prevent the next one. But faith is fragile. When investors flee, when yields climb, when a single downgrade breaks the illusion, the high priests cannot bless the numbers back to life. They can only buy time. And history charges compound interest on borrowed time. In every age, power hides behind language. Once it was religion, then it was law, today it's credit, and the temples are still open. When belief fades, the numbers turn on their creators. Bond yields rise, currencies wobble, the invisible becomes visible, and suddenly the debt that once seemed abstract now demands blood. It begins quietly, a downgrade here, a missed payment there. Then panic compounds faster than interest. Investors sell, spreads widen, liquidity dries up. In the modern world, collapse no longer sounds like gunfire. It sounds like silence in the markets. In 2010, Greece discovered that faith has a price. When its debt became unpayable, the bond markets revolted, yields spiked. The European Central Bank and the IMF stepped in, not to forgive but to control. Austerity replaced autonomy. Taxes rose, wages fell. For an entire generation, rescue became another word for sacrifice. In Argentina, the cycle repeated. Default, devaluation, despair. Each bailout bought stability and sold sovereignty. In Sri Lanka, when foreign reserves vanished, fuel lines stretched for miles. The creditors didn't invade. They simply waited. Because in the age of debt, control no longer needs armies. It only needs spreadsheets. The pattern is the same from continent to continent. First comes the optimism, then the borrowing, then the reckoning. The system never fails entirely. It just resets under new names, new rules, and the same math. Debt forgiven becomes debt reissued. Collapse becomes opportunity. Because the truth is uncomfortable. In the 21st century, debt isn't designed to be repaid. It's designed to be rolled over forever. Governments don't clear their obligations, they refinance them. The interest becomes the product. The promise becomes the profit. This is the great paradox of modern finance. If nations ever paid off their debts, the global economy would collapse. Because those debts are not liabilities, they are the world's most trusted assets. To destroy the debt is to destroy the collateral of civilization itself. That's why the system must never end, only continue. Because the moment the world stops believing in its own reflection, the silence will sound like truth. Every empire thinks it can manage decline, that it can refinance history, legislate trust, and negotiate with gravity. But history isn't a market, it's a ledger, and every entry, every deficit, every denial is written in ink that cannot be erased. When the system finally trembles, it will not announce its fall. It will look like recovery. Markets will rally. Analysts will smile. Politicians will speak of soft landings. But what returns will not be confidence. It will be habit. The empire is not healing, it's rehearsing denial. Rome called it reorganization. Spain called it divine correction. Britain called it austerity. We call it monetary policy. Different language, same ritual. Each crisis ends the same way, by restoring faith, not fixing facts. New rules, new acronyms, same cycle. Because the world no longer fears debt, it fears silence. Growth itself has become a defense mechanism against reflection. The survivors will adapt. The rich will purchase what the desperate must sell. The poor will learn to live with less. And the middle class, the heartbeat of every civilization, will thin until it becomes a memory. Still, collapse isn't the end, it's the audit. Rome left laws, Spain left language, Britain left institutions. What remains after every reckoning is what truly mattered all along, the ideas worth keeping. So the question isn't whether the American empire will fall, it's which part of it deserves to survive. The greed or the grit, the empire or the idea. Because decline, like debt, always offers a final choice, repent or repeat. If 1929 was the crash of valuation and 2008 the crash of debt, then 2026 is the crash of illusion, the end of believing that prosperity can be printed. Empires never fall in a day. They fall in interest payments, in quiet policy meetings, in the slow withdrawal of faith. And when the ledger finally closes, the numbers will vanish, but the lesson will not. History doesn't repeat, it settles its debts.